Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Scotland to speak with Ian Fraser of ianfraser.org. Ian is a journalist, blogger, broadcaster who has made documentaries for the BBC about the financial collapse, including RBS, inside the bank that ran out of money. Ian Fraser, welcome to the Keiser Report.
Hi, Max.
All right. Ian Fraser, the rigging of LIBOR rates was first mentioned in the media as early as 2007. So why has it now only become the scandal that it is? And how high up the ladder does this crime story go?
Well, I think one of the main reasons is that we have, a very weak regulatory regime here in the UK, but it's not just the UK, it's obviously other countries as well. There was a kind of complicity between the financial regulator, the FSA, and the Bank of England and the banks, seemingly. I don't know quite when that element of it started, but it probably didn't start till the height of the crisis in about September '08. But certainly, it was well known. In fact, there's a guy called Tim Bond who used to work for Barclays Capital, who went on Bloomberg Television in May 2008, and he publicly stated that there was a deep concern about these numbers and whether banks might be making them up. So you'd have thought, the FSA might have started to investigate at that point, but they didn't. The
pushback by the financial media, carried in the Financial Times, for example, is that, they committed crimes, but they saved the system from collapse. Is that a legitimate response?
Not in my view. I mean, I think, there's no excuse for committing crimes. And even if they are sanctioned by people like Paul Tucker, or if they were sanctioned by people like Paul Tucker, it doesn't excuse them in my view.
Right. I think the word for that in economics is moral hazard. And we've seen this play out over decades now, whether it's long-term capital management being bailed out by the Fed, whether it's the stock market being bailed out by Reagan and Greenspan in '87, or LIBOR supposedly bailing out corrupt banks in 2008. There doesn't seem to be any line in the sand over which these regulators won't forget about. The FSA, the Serious Fraud Office in the UK. The UK, of course, is where we had Lehman Brothers, AIG, Bernie Madoff, MF Global. Why is London such a crap regulator?
I think the rot really set in at Big Bang in '86 when Mrs. Thatcher's government deregulated the financial sector, and she demolished the silo-like structures and the partnerships that used to exist within the city. And in those days, I'm not saying it was totally clean, but it was less easy for conflicts of interest and corruption to occur. And there's various key dates that, as I see it, 1992 was a key date when there was the last ever criminal trial of high-level bankers from the City of London, which was the Blue Arrow trial. 3 senior executives of a bank called County NatWest were given suspended sentences for rigging a rights issue. And one stockbroker who helped them from UBS Phillips and Drew was also given a suspended sentence for rigging a rights issue. Now, the trouble was, this didn't go down particularly well with the establishment, so they engineered a court of appeal case in July '92 where the sentences were quashed. And on the day of the quashing of the sentences, a friend of mine was phoned by a contact of his in the SFO, Serious Fraud Office, and the contact in the Serious Fraud Office basically said, the message has come down from on high. There will never again be a prosecution of a high-level banker or a mainstream city institution. So it would appear that from that moment on, there was a kind of new agenda had been set, whereby people in the city, and bankers in particular, were given carte blanche to do as they chose. This could include, false accounting, this could include defrauding their clients, could include money laundering. And it seems that, a dangerous precedent was set at that moment. But the situation, if anything, got worse under Tony Blair and Gordon Brown, when in 2000 they passed an act called the Financial Services and Markets Act 2000, which basically included a clause which said that the competitiveness of the city was more important than the rule of law. It said that regulators must consider the international mobility of the financial businesses before taking enforcement action, and they must avoid damaging the UK's competitiveness. So essentially, they were kind of telling the FSA, the newly born FSA, that it should always consider whether or not financial institutions might move overseas before they prosecuted them. And I think this was serious. And then in 2002, you had another thing, which when Sarbanes-Oxley came in the US, it would appear that Gordon Brown and Tony Blair had deliberate strategy of what's called a race to the bottom in the regulatory sense. I mean, I'm not saying that there was obviously regulation. There were loads and loads of regulation, but it's whether they were actually applied or not that mattered. But that the overall policy was not to properly apply the regulation that existed.
Right. Now, what's interesting in the last couple of weeks is that this LIBOR scandal at Barclays Bank and including other banks around the world is now entered into the Bank of England. So it's gone into the inner sanctum of the world central banks. Over in the U.S., of course, there's this audit the Fed movement that's been active for quite some time, a suspicion that the Federal Reserve Bank under Ben Bernanke has been committing acts of interest rate manipulation and fraud. But now Mervyn King is implicated in this. Do you think this will have, as some are speculating, a kind of a ratcheting up of the post 2008 crisis, leading to what some are calling the industry's tobacco moment, where the tobacco industry suddenly had to admit that their products were carcinogenic, and it changed the industry? Are we headed toward a moment where bankers have to admit that their fundamental business plan is toxic, they're a cancer, and the industry must change?
I sincerely hope so. I mean, I read that article in The Economist, and it was amazing to read that article, especially after their January article, which was called Save the City, which was really an abomination of an article. I was absolutely appalled by that piece. So the one they've just done, which mentions that quote of the tobacco moment, I agree with it, and I sincerely hope it is the tobacco moment. It's the moment where banks turn the corner. But, one's never that optimistic. You look at the precedents, and one does wonder whether or not they really are capable of reforming. And in terms of the complicity of the Bank of England and the UK Treasury and others, that has still to fully become apparent. But, it's difficult to know whether the Bank of England officially ordered the banks, including Barclays, to lie about their interbank borrowing rates, or whether or not they were maybe just kind of saying it would be okay if they lied about their interbank borrowing rates. But I suppose either is both of those are fairly unacceptable. Yeah,
now let's talk about the Royal Bank of Scotland, RBS, a bank you know well. It's the latest to be implicated in the LIBOR rigging crimes. The bank is mostly owned by the taxpayer. So why is the Treasury refusing to hand over documents relating to LIBOR rigging? And what will these documents show?
Okay, well, there's an inquiry underway in Canada, which is being led by the antitrust authority there, the competition authority in Canada. And the bank, Royal Bank of Scotland, is desperately trying to avoid handing over evidence to the Canadian regulators. And I think at the weekend, well, I know at the weekend that Vince Cable, who's the business secretary and is generally pretty, aware of the sort of things that banks get up to and wants to try and sort them out, he said that it was a no-brainer as far as RBS is concerned. They must just hand over this evidence. But it isn't just what's happening in Canada that matters. It's also what's happening in Singapore, because there's a trader there called Jimmy Tan, who was by far the bank's biggest earner in the Asia-Pacific region in 2009, earning about 80 million of the 160 million profit it earned in Tokyo, for example. And this guy is now being scapegoated, or it would appear that this guy, Jimmy Tan, is now being scapegoated by the Royal Bank of Scotland, and they're trying to accuse him of single-handedly manipulating the LIBOR numbers in order to make profits for himself and for the bank. Whereas the truth would appear to be otherwise. It would appear that, in fact, he was given orders by people higher up in the bank.
Right, well, that's what's going on here at the Bank of England, because up until now, the banks have pointed at the so-called rogue trader and the bad apple. But if Bank of England is authorizing this stuff, as it looks like they are, then we're talking about systemic crime syndicate infecting the entire system. Now, at the same time the LIBOR crime story was unfolding in the media, Ian Fraser, there was a less reported story of the swaps mis-selling. Tell us about the crime, which banks were involved.
Okay, well, that one involves every UK bank. The key players include Royal Bank of Scotland, HSBC, Barclays, Lloyds, and Clydesdale. I don't know about Santander, whether or not it was involved, but it probably was as well. Basically, what they did was they sold interest rate swaps to SMEs, which are small companies, many of which had no understanding of what it was they were buying. In fact, they were told it was something completely different. They didn't understand that if the interest rates fell, they could suffer huge costs, and they would have huge break clauses or break costs if they wanted to exit from these products. But it's basically one of the biggest scandals that's afflicted the UK banking sector certainly within the last couple of years. And it is literally destroying small businesses up and down the country on a virtually daily basis. And I've spoke to one this morning. He said that some of his friends are considering suicide. It's so serious. People are, not just losing their businesses, they're losing their homes. And it's just obscene. I mean, these products should never have been sold to these companies who had no idea what they were entering into.
All right, finally, Ian Fraser, people like to describe these crimes as victimless crimes. You just described a situation where people are either threatening to commit suicide, or we've seen instances of actual suicide going on. But the biggest loser in all this, of course, are the people who are the big losers when interest rates are manipulated down. And that, of course, would be the pensioner and the savers, who end up underwriting and subsidizing the speculators in the City of London. Why aren't the pensioners who, instead of getting 4 or 5% rate of return, which would be normally what they could anticipate in a non-fraudulent system, are getting only 0.5%, why aren't they more vocal in demanding that they get their full return on their pensions instead of, a 90% discount to accommodate for the fraud?
I don't really know. I mean, I'm very surprised they're not being more vociferous, especially when you think so many pension schemes have lost out because of the LIBOR manipulation scandal. But I think one of the problems in the UK is the people often are just like, they grin and bear it. If things get bad, they just kind of think they should just shut up and accept this bad treatment that's being meted out to them by the Bank of England and the financial system. Maybe they will become more vociferous now, considering what's emerging.
Well, yeah, okay. Ian Fraser, are there, in this grand scope of things, are there any prosecutions at all? Were there anyone going to go to jail here? What's happening on that prosecutorial front?
It does seem as if the political mood changed on the 27th of June when the Barclays settlement was announced. It seemed that, the politicians finally woke up to the fact that some serious crimes have been committed by bankers. And so they did say, even David Cameron, even George Osborne, Ed Miliband and others suggested that criminal prosecutions should certainly be looked at. Personally, I'm not, holding my breath, but the SFO, the Serious Fraud Office, which is a pretty incompetent institution and has a history of failure when it comes to prosecuting high-level financial crime, is allegedly looking at it. So we'll have to see. But I mean, you have to prosecute these sorts of financial crimes, and you have to, if people are guilty of crimes on the level which have been unveiled in the Barclays report, then they should presumably go to jail. But I'm not holding my breath, to be honest.
Okay, Ian Fraser, we're out of time. Thanks so much for being on the Keiser Report.
Thanks very much, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Ian Fraser of ianfraser.org. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.